Hello students, in today's class I'm going to introduce you to some new terms in financial accounting which I have carefully selected for modern exams for your level. Okay, so let us discuss the few of them as follows. Here I have the old terms and here I have the new terms. So student is advised to embrace the new terms because the old terms are no more applicable in modern exams. Okay, so let's get started. Number one, assets. We know that assets are properties of business. So in the old terms, assets are classified into number one, fixed assets and current assets. But in the new term, assets are now classified into non-current assets and current assets. So the fixed asset is now non-current assets. All right. Fixed asset is now non-current assets, while the current assets remain the same. Students should take note of that. Number two, liabilities. In the old term, liabilities are classified into two. Number one, creditors falling due after 1 year. Creditors falling due after 1 year. And number two, creditors falling due within 1 year. In the new term, the creditors falling due after 1 year is now non-current liabilities, while the creditors falling due within 1 year is now current liabilities. For students writing modern exam, you should take note of this. Okay. Now, capital in the old term, that is what the owner contributes into the business. All right. So in the old term is capital, but in the new term, if it is a company, it is now equity share capital. Equity share capital. Okay. But if it is one-man business or partnership business, it is still capital. All right. Number four, we have debtors. In the old term, it is called debtors, but in the new term, it is called trade receivables. Debtors are customers that owes a business. Okay, so they are now trade receivables. That is the new term. Creditors, old terms. That is the suppliers the business are owing. Okay, our suppliers, those ones we have not made payments to them, they are now trade payables. All right. Stock, we have opening stock and closing stock in the old terms. But in the new term, stock is now inventory. Inventory. Opening inventory and closing inventories. Okay. They are the merchandise of business, or what the business deals with in terms of buying and selling or producing. Okay. Now, net profits in the old term. But in the new term, the net profit is now profit for the year. Profit for the year. I can hear someone say gross profit. Gross profit remain the same. But net profit for the year is now profit for the year. All right. In the old term, we used to have balance sheets. Okay. Balance sheets. But in the new term, balance sheet is now statement of financial position, SFP. Statement of financial position. All right. In the old terms, we used to have trading and profit and loss accounts. But in the new term is now statement of profit or loss account. Take note, profit or loss account. But in the old terms, you will see some old textbooks, profit and loss. But it is now, is either you make profit or loss. So it is SOPL, statement of profit or loss. In the old term, it used to be T formats. All right, but now we use vertical format for these two statements. Okay, then I will stop here by looking at bad debts in the old term and provision for doubtful debts. Provision for doubtful debt. Now in the new term, bad debts is now tagged irrecoverable debts, while provision for doubtful debts are irrecoverable allowances. We make allowances for them. All right, so there are still many other ones, but based on your level, I decide to select these few ones which are very common to your exam at this level. All right, so students should take note of that. So as we progress, I will be bringing those terms into your notice. Hope you understand. If you do, thank you. So you can revise, replay the video so that you have a proper understanding. So don't forget, always remain safe. Bye.